The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed it out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right. Good morning, everybody. Welcome back to another live stream. Happy Thursday, everybody. I was just setting up my office room. I've got like curtains just to block out the sun so I can be a true, day trader and stare at charts with no sign of life all day. And as I was doing that, I just noticed it's beautiful out there, man. It's fall time is upon us. The leaves are changing colors. It's great. I don't know if anybody else loves fall time, but I certainly do. And then I get to wear my fancy snazzy jackets and things like that. So I'm all for fall. Nick is a vampire. That is, I can't deny it, right? Halloween is, we're talking about Halloween in the chat today. Halloween is not even a Christian thing. It's a pagan ritual. I love Halloween. Whatever it is, it's awesome. Pumpkin Spice fan? Not really. I'm a simple coffee guy. Anyways, hope everybody's doing well. Bounce back in stocks continues. We are up 0.4% here on the NASDAQ. Still holding, at least for now. We can really read into these daily charts and keep an eye on what we're seeing here, which is I made a post on my Instagram, which if you guys don't follow me on Instagram, you should. I'm really trying on Instagram nowadays. We are we've the editor and I are locking in on figuring out how to make great content for Instagram as well as YouTube. But anyways, follow me at TraderNickFX if you want to check me out on Instagram. But on Instagram yesterday, I made a post just talking about how, this has been the theme of 2025 is letting your political biases, your emotions about the, scary headlines completely dictate a lot of your trading activity. And I'm not saying this about necessarily everybody. I'm just seeing it all over my socials. We know that, the president of the U.S. is a very either loved or disliked guy. Unfortunately, what that does to a lot of people is they can't separate that from their trading. So they say, oh, this news came out that the president said this and it freaked everyone out. And then so people who like him, are making these irrational, like, oh, he wouldn't let us down. We're going to go right back up. And then other people are saying, well, he's going to mess everything up, right? And so my point would be both of those are mistakes because you can totally make the mistake of being overly confident or overly pessimistic just because you don't like someone's perspective. But the whole market is not about the president. Sure, he can cause some spikes, but in the end, in the big picture, what moves markets? Is it a tweet? Is it yes, in the short term, but in the big picture, the bigger picture, what moves markets? The M word, macro. The economies of the world move markets. The flows of money into and out of an economy or into an asset or, the economies of the world are ultimately, as far as I'm concerned, they are the engine for growth in certain things. So the danger is if you come to the conclusion, I've made this reference many times, but over here, I'm not even kidding. People were so euphoric about stocks because Trump's in office. We're going to new heights. that cost them big for people who over leveraged, and because they let their politics get super involved with what they're doing, they're like, Trump would never let us down. We're going to go to the new highs. And then people who really disliked Trump, I can tell you, commenting like crazy on my YouTube channel, he's going to screw up the whole US economy. We're going to crash. It's going to zero. And those people got destroyed when the market reversed. People, human beings, have a tendency to overdo things in markets. They let their emotions completely get the best of them. Leave that to the best of your ability. I know we all have biases. There's nothing wrong with having a bias. Oh, you dislike this, you do like this. That's fine. Just find a way to leave it out of your trading. I'm telling you, man, it is devastating to a lot of people who cannot separate their, in fact, I'll give you a little pro tip. You want to live a happier life? When you start seeing that stuff pop up on your TikTok and Instagram, press and hold on there and say, not interested. Telling you what, you do your thing. If that's something you're really into investing your time and energy into, you do you. But for me, not going to happen. I hit not interested in all the controversial, rage bait that keeps you angry and unhappy 24/7. No, not going to do that. And it's bad for your trading. Straight up, it's bad for your trading. Like staring at that stuff, if you are obsessive about politics, it's bad for your trading, man. Because then you're just going to look at everything through the lens of politics, which is toxic, by the way. Nobody likes that guy at the party. So don't be that guy. Anyways, that is a side rant. Keep an eye on the macro. That's the point of today's, that's the theme of this week, right? You get a crazy back and forth week like this. I'm staying with the Edge Finders bullish ratings. I like the setup for NASDAQ to new highs, not because I'm a Trump super fan, but because the macro makes sense for me. We have seasonality that looks really good for the stock market going into year's end. We also have, at least our latest data, we have institutions that are still long the NAS. We have inflation data that looks promising, where we are under 3%. We're not flailing higher, at least so far. We've heard a lot of Fed officials say that inflation seems like it's going to be a pass-through effect. It's not going to be a end of days inflation spike due to inflation or due to tariffs like we've heard, which is good news for the stock market, right? Because that means interest rates are still on the table. We also have economic growth that looks good. GDP numbers, PMI numbers, retail sales numbers. And so I just want to pause again just to finalize this topic. If you really dislike the president, many people would rather see the president fail and the economy fail than to just say, hey, the economy looks okay. And that's not all due to the president, right? That's where, again, people are just like wild about this stuff. Is the economy is way bigger than just one president. The economy, you got to think, is like in the makings of hundreds of years in the US. There's a lot of infrastructure that's been built over many decades. It's not up to just the president whether or not the economy is good or bad. There's a lot of stuff that impacts the economy. Like, for example, business cycles. There's secular trends like AI is bipartisan. That is just a huge game-changing thing in our world right now. And I am a believer in the AI story. I do think that stuff has gotten a little expensive overall, so I'm a little cautious, but I am long. I liked the trade setup because I thought that the when we had the big panic flush, that has, at least in history, been a very, very good edge to just, I heard Forex James talking about this. He made a great point. I mean, that's been an edge in the last few years. No, this was Marco. I'm sorry. Marco, who comes on the streams, he made a post on Instagram about how the edge recently has been when the market freaks out about something Trump is doing, the taco trade has been so effective, right? The idea, Trump always chickens out. The idea that he reverses or at least takes the edge off of what he previously said. Doesn't matter if you like or dislike him. Again, that is something that we see repeated in markets. So, that trade has been really strong. So we hit support. I took that trade not just because, I thought that the tweets would get walked back, which they did, but because the NASDAQ still looks good to me on a overall edge finder basis. That plus a support level, I went long. Nick, what's a quick question? How can we identify a recession? Great question. So recession traditionally is referred to, there's some nuances to defining a recession, and you can define them a little differently. But the most standard way I know of calling a recession is 2 quarters back to back of negative GDP for an economy. So if we look at the US, now here's the thing, right? When we look at GDP numbers for the US, they look great right now. However, the last quarter, so this is a quarter, these come in 3. So each 3 is a quarter, just so you know. The reason for that is because you get the advanced, preliminary, and final GDP reports, right? So this is for Q2 of 2025, and Q2 was a banger. We had a really strong bounce back from Q1. So if we had seen, for example, in Q2, another negative quarter, that would have been a technical recession by a lot of accounts. But that's not what we had. GDP growth rate is a easy way to define a recession. It's the simplest way that I like to look at it. But GDP growth has actually bounced back really nicely after the initial, tariff worries and such. Now there's some nuance here because imports get reflected as negative for GDP. So we had huge amounts of imports in the first quarter due to expected tariffs coming down the pipeline. So everybody imported before those deadlines, right? And then the opposite happened. Everybody stopped importing as much. Like there was a bunch of pull forward. Like if I told you, for example, that the Edge Finder, like, hey, this is a good tactic. Maybe I'll use this. If I told you that the Edge Finder was going to be $5,000 next year, it's not. Don't worry. I can't promise that. But if the Edge Finder, if I told you the Edge Finder was going to be $5,000 next year, then a lot of people would probably purchase it before the year's end. It's not going to be. So I'm not going to pull that on you guys. But you see how that would encourage if you're like, I'm thinking about getting the Edge Finder. If I told you that the Edge Finder is going to be $5,000 next year, and maybe the iPhone is a good example of this. If the iPhone price is going to skyrocket due to tariff stuffs, a lot of people would buy iPhones sooner, right? To take advantage of the pre-tariff prices. I don't know if you guys saw that. I saw it a lot in like furniture stuff. There's a bunch of like furniture stores doing pre-tariff sales, which was, some crafty marketing. But yeah, that's what I think happened in the economy. However, we are still, analyst expectations are in yellow. These yellow dots showed that analysts expected the economy to grow, but we actually had better than expected growth. So the economy holding up pretty well. And so that's another reason why I am bullish on stocks, is because I think that, if you want stocks to go up, if you want the NASDAQ, the S&P, et cetera, you want good earnings for companies. How do companies put up good earnings? Well, on an individual basis, it's innovation and cost cutting and being efficient. But for a whole economy, for a whole stock market, it's about the economy. Is the economy a very fertile crescent for spending? Is the consumer holding up well and going out there and spending a lot of money and, buying the latest PlayStation? I don't know, right? Like those things cause earnings to be strong. And so earnings are very correlated to how the economy is doing. So if you have strong GDP numbers, if you have strong economic reads, that's good for the stock market. So overall, all of the stuff that I'm describing, I know is kind of high level and like we have to really walk through to understand it. The purpose of the Edge Finder is to scan and monitor that stuff for you automatically. There's no magic here, but it does automatically scan all this data, and it gives you a general synopsis of what it's finding. That's the purpose. The Edge Finder's real worth is more than $5,000. Loving it. I appreciate that. Thank you very much. I would agree. I would pay more than $5,000 for the Edge Finder because I have. I've spent a lot of money building the thing. It's a great tool if you are someone who is interested in macroeconomics. If you are interested in implementing that into your trading, if you're interested in scanning institutional activity, market sentiment. Speaking of which, I wanted to look at the AAII in just a second, see what sentiment is looking like. Okay, so we're looking at the S&P 500's options flows here for the recent days. What we can see here is the put to call ratio went from, and this was where I was buying, was the put to call ratio screamed higher, meaning people bought puts big time on the sell-off day, right? So like last Friday, we saw people sell, get wiped out of crypto positioning. And again, I'm not mocking or like that stinks for those people. There's a lot of people who blew up and learned some really hard lessons about leverage last Friday. Again, painful experience. But for us who are not super leveraged, I saw that as a huge opportunity to buy into that forced selling. Remember, so here's the thing, right? One of my favorite trading setups, it's less about technicals and more about positioning, right? So we talk about three things on my show. If you are watching on a consistent basis, you know that we talk about three things: fundamentals, which is macro; technicals, which is price action; and sentiment. Sentiment analysis is looking at what the crowd and what the institutional, the professional, is thinking about. Okay, so one of my favorite setups in the markets is rare, very rare, and it happened on Friday. It's why I went long the NASDAQ. It's a super, super high kind of risk to reward approach. It doesn't work every time, but I want to explain it to you guys because I took the trade, shared it with the VIP group, and we're still in that NASDAQ trade. I'll show you in just a second. So we have three things we look at. We look at the fundamentals, which is, of course, macro. Super important for general directional bias. Technicals, good for entries and exits, right? Finding support levels, managing risk, putting a stop loss on thing. But sentiment is wildly powerful because on Friday we had a very rare instance, and it was why I took a stab at going long the NASDAQ. Now, again, part of me was like, dang, NASDAQ's going to fall off a cliff. And, I didn't take a massive size trade on the NASDAQ, but I took a long because a rare trading opportunity set up on Friday that I love: forced selling. Okay. Leveraged traders getting wiped out. This is a vicious game, man. The markets are unforgiving. They're not kind, but this is reality. Okay. Forced selling is one man's devastation and another guy or girl's opportunity. In my opinion, this is one of my favorite trades in the book. Last August, this happened. It's rare. Forced selling is when leverage gets unwinded very quickly and people have to sell regardless of where the price is at. For people who are not leveraged, who have cash on the sidelines and who have been patiently waiting, we call that opportunity because that's forced selling for someone and cheap prices for others. Okay, so we spotted that. We have tools to look for that. That's, again, the Edge Finder is not just a fancy, pretty looking thing. It is beautiful. It's gorgeous. You put a wedding dress on the Edge Finder, I don't know, man. But the point is, the sentiment got extreme on Friday. And so I took a stab. I took a stab at the alongside on NASDAQ, and it worked out. Obviously, I wish I had leveraged up massively and took a huge trade, but I didn't. I just took a constructive long because, again, sentiment got really one-sided all at once. I saw something where it was like the Bollinger Band on the SPY went from, or some major index went from the extreme level to the extreme opposite level in one day. Very rare for forced selling to get you there in one day. So anyways, we got Chris Pulver joining here in just a second. As we set that up, I just wanted to remind you, if you want to check out the Edge Finder, again, I'm telling you, having the right tools is game changer. I wouldn't sell this thing if I didn't genuinely believe it's worth every penny. And we do have, just full transparency, in 2 weeks, we have our big sale of the year starting. So I would encourage anyone who is interested in the Edge Finder, now is a great time to try it out. We'll drop a link here in the chat to where you can sign up for a 30-day trial if that's something that you're interested in, or getting access to the free demo version of the Edge Finder. It is a limited version that is available for free. So here is the link. if you want to check it out. We'll also change the QR code on the screen here in just a second to where you can scan that to get access to the Edge Finder trial or free demo version. Both are your options. Just scan this QR code or click this link that's just been dropped in the live stream chat for more information. I genuinely think that if you watch my streams, if you watch my content and you're like, I want to be a fundamental or macro or sentiment trader, if you want to implement this stuff, get our tools. A huge sale is coming up. I'm being transparent about that because the big discount is coming. It is the best opportunity of the year to get it. So with that said, we're now going to go ahead and bring in Chris Pulver here in just a second. We'll get that set up. Producers got us in the backside, and we'll go from there. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. All right, Chris is here. Hold on, we'll get you uncovered here in just a second, Chris. Let's see. There we go. What's up, Chris?
Good morning.
So gold is up 62% year to date. I was just looking at something on that. And I wanted to ask you about this. Is that actually, like, are we getting to a point where that might be a warning sign? 62%. The thing, averages, I think, over the long term, like 2% average per year or 3% for, over the last like couple hundred years, something like that. What are your thoughts on that? Is there a warning here?
I mean, there has to be. This is so unusual. Even the last, I mean, the acceleration in gold the last 3 years has been pretty crazy. I'm looking at the monthly chart, or the yearly chart rather. And since we had, I mean, I would say the rip in COVID, the pullback, but yeah, I mean, 23, 24, 25. What's funny is the gains in gold have been overshadowed by the S&P because we had two 20+% years, NASDAQ, same thing. But just that little background of 2023 and 4 and 5, I mean, gold has been furiously bullish. I don't know. I mean, I keep racking my brain of like, how could I participate? And look, the only way I could have done better in these last couple of years with gold is by not taking the position off and just putting in trailing stop losses, which I don't know. I don't know if I probably wouldn't have stopped out right here. Once we crossed above 40.60, if I look at this candle, I would have been super tight with my stop loss where we're up here towards like 40.40, pull back to 73. I mean, my stop loss is probably sitting right there. So I would have been out either way. Now we're at 42.49. It's remarkable. I'm just
thought like
that I'm not participating still.
A couple weeks ago, I was like, are we really going to see straight to 4,000? That would just be insane.
Yeah,
and
now we're looking at maybe straight to 4,500. Yeah. I mean, 4,000 didn't even matter.
Yeah.
So, let's take it back a notch for the technicals. We are pretty far. I'd like to look and see like how far of a distance we've actually had away from like a 21 period or 50 period. I almost wonder. I mean, there has to be something linked to the timing of this. We're clearly dealing with a big indecision zone this week. I mean, this is the big sell-off from Friday. The market is still inside that candle. We're up a little bit this morning with futures. We're still not necessarily taking out highs. This is SPY at 674. Then the lows around 653. not taking anything out. I could see today, tomorrow also being like extremely choppy where prices just don't do anything. But I have to wonder if we have I think the healthier move is that the market pulls back. I'd be more concerned if the market blows through this resistance. Let's go SPX here. If we blow through resistance, these two yellow boxes on the top, this is just a measure move from Friday's candle. So if we go high, low, we break out of the top, hit 100% move. We break out below, hit 100% move. I mean, the ability to hit 69, 65 and nearly testing 7,000, Nick, would be the breakout to the upside. Or we pull back and we have a healthier correction. I heard you say it earlier. It's like everyone that's been patient, waiting for some opportunities. That would be, I think, the best opportunity to be long with the narrative of, okay, US and China can fix this spat that's going on. We have a Santa rally. We've got animal spirits. We've got the economy coming back. We got the government coming back off a shutdown. This narrative to me is what would justify, okay, we fall first, then we rally into the end of the year, because all this stuff can be resolved with like the happy solution. Instead of, we would push higher through all this noise and all this uncertainty. And I feel like once everything comes back online, I don't know. I guess one thing I was looking at overnight was TSM. TSM had earnings and it's up. So the semiconductor space, which was kind of leading the charge this week, it's still up. I think the AI theme is a big buffer to kind of, I don't know, it's kind of marinating the bad. Does that make sense? Like it's coating the bad with like everything that's AI solid is still like, yeah, it's a good narrative. Everything's good.
2025 has been strange because overbought readings are buy signals. That's the strange thing of 2025. Like overbought means buy. Anyways, I wanted to also just follow up on something with the gold story, because so what we're looking at here, guys, this is 2002 to 2012. As we've gone on higher and higher this year, my thought for a little while was, we're getting rate cuts globally, like US. Like there's not any major central bank that has plans to hike interest rates even on their books, right? Like everyone is planning to cut or hold. Right. And so obviously what that means for gold is very, very bullish. But there is like a point where I'm like, okay, that makes sense. Gold should be up this year. We've seen continued like muting in global inflation to an extent. We've seen central banks guiding to rate cuts. That should be bullish for gold. But there's a difference between bullish for gold and an astronomical moonshot on gold.
Right.
If you told me central banks are going to cut, I would for the year, like this is my trajectory projection of gold. I would expect like
find a channel.
3,400. Yeah. Like a controlled move higher. Like, yeah, we're still cutting rates. All right. Gold keeps moving. We're like talking about an explosive move. And I went back to 2000s because, to be fair, you had the blow off, 2008 came kind of late in this rally. So like, even though gold was flaring up like this, what's interesting about it is that before the 2008 major sell-off, gold kind of made this kind of move. And then kept doing that after for the next, 3 years or whatever. But I just think it's interesting. I do think that gold may not even know itself why exactly it's, what it's preparing for, but it does send.
Only Peter Schiff knows, Nick.
Only Peter Schiff. And if you buy his gold, it's better. It's shinier than everyone else. I don't know what exactly it is signaling, but it is, you had peace in the Middle East. You have there were some things that I would have been like, yeah, that should probably cause gold to chill out, and then just nothing, no pullbacks. Somebody asked in the chat, will it ever pull back? Of course it will. Like, don't come to the conclusion it will never pull back and I should just buy it. Like, be careful, please. But something's going on.
Take a look on your chart there. Look at XAU BTC. I do wonder if we are carving out. It's maybe a bit of a stretch on the pattern, but if you look at the recent lows, I almost wonder if we're going to continue to see an outperformance of gold versus Bitcoin. Somebody told me yesterday, I think that gold is the new Bitcoin. I'm like, I don't think you want to say that. If you want 70% pullbacks in gold, then you can say that. But if you want gold to become like it's kind of reasserting itself as the global safe haven type asset, then sure. But Bitcoin is still Bitcoin. I just look at that rate, that comparison of gold versus Bitcoin. It's clearly been Gold has been outperforming by quite a bit this last I'd say 3-4 months especially. But if this is a price pattern, I've got to wonder if something like this with this recent break, if this is a head and shoulders pattern that either hits a symmetry move, so we hit this type of symmetry, or we measure the break of this neckline and measure it out to like, I don't know, this 0.055 or something like that. But we'll see. I mean, if they run together, that's interesting. It's crazy that gold just continues to get the bid with rates are being cut, banks are printing more money. I mean, even Powell's, when we were on the session this week in Powell's speech, basically when they're saying that they're going to end quantitative tightening, what's the other play? Quantitative easing. It's either no tightening, normal, or quantitative easing. More likely, they're probably leading into like a subtle QE, is in addition to a pretty dominant fiscal policy. So it's all going to end badly at some point. And that's not like the big bear scare. It's just the chart of gold can't do that. It can't do this forever. We all know that. I mean, I thought about this. This chart now looks like lumber in 2020. This chart looks like cocoa. This chart looks like copper. Like all these things that
how those ended.
Like they all go parabolic and then they all end. And one of the biggest, ugliest shakeouts is going to be when this thing decides. I don't know what level it's going to be. I don't know what the catalyst is going to be, if anything. But when this thing puts in an actual top, I mean, now we're talking. This is a daily time frame, and we are 22% away from a bull trend support. And all these could be supportive, but 22% to still find really good structure, and there's just no sign of stopping or slowing. I think that's what's been crazier is the last, other than maybe like a pause candle, this thing, hey Nick, this is behaving a lot like the Japanese yen. Where it's just, it won't go down, it just pauses and it keeps going and it's reaching to new heights and nobody knows where it's going to stop. So
well, and I've been looking at this with gold prices because this is starting to feel like what we're seeing in gold. In the 1980s, 1970s, you had this just parabolic moonshot, and the thing is, people love to chase, right? People, it feels like, I literally told the story the other day of my friend who ran down to our dock when we were hanging out and he was like, hey, you got to buy some gold. Doesn't know anything about markets. He just heard on the TV, like, hey, gold is going to the crate. Well, like, just for everybody, for reference, like it can happen where gold could top out where it is for quite some time. I don't know that it's going to do another, 25, 30 years of sideways trading, but you very well could get 2 years of consolidation pullback in gold from here. Like maybe if you're just drawing a line of best fit, let's do a logarithmic chart, like, just play with a simple idea here. Like maybe you pull back to 3,000, maybe, just like, you have to kind of cool the jets and just put your expectation to the side, because if you're someone who's bullish, like, where do you think gold is reasonably going to go? Like 5,000, maybe. I wouldn't call a top on this. Like I couldn't tell you. Maybe it goes to 6,000. I have no idea. But I also know that like after these types of moves, any of those types of moves in the history are usually followed by some period of consolidation and downside. So if you tell yourself like, oh, I'm not going to ever get another chance to buy gold, like it's only going to go higher from here, just be careful because history would say otherwise.
Sure. Also, one thing you want to be careful of is puts are really expensive on gold. So even though the price of the asset's going up, it's really expensive to hedge. So if you do want to hedge your position, I would do it with spreads. If you're trading options, I would do it with spreads versus just buying the outright put. If you want the upside, it's like you're gonna have to pay for something for insurance. And I think that put spreads would be a smart way to play it, just to save you on the capital. I saw yesterday the put skew was like 81%, which is extremely high. So you're paying a huge hefty premium, even though the asset is ripping to the upside. It's just really expensive to now protect it. So
I got another chart for us to talk about. We talk about this every Thursday. So we've got the investor sentiment survey. Interesting shift. I
was looking at that yesterday. I was curious what happened to the bulls and bears yesterday. They come back down.
Yeah, so bears 46.1%.
Oh my gosh.
That's a huge jump. So
what is happening, man?
From very confidently bullish to I mean, people panicked. I mean, there's nothing. Here's the thing. I said this earlier in the
Back in the pain trade.
Like, if you keep to the best of our ability from actual execution, like politics are very emotional for people, and so we know that like this panicked people, and that's exactly what we saw like earlier in the year. Is one sign of like Trump versus President Xi going at it, and the market freaks out. So. And for good reason. I mean, there's some valid concerns there. Like, if you're going to send us into a prolonged multi-year trade war, that is scary. But you can see how sensitive that sentiment can shift.
I mean, that's way more of a shift, especially on the bullish side than I thought. We went from 28 back in September, 28% bullish to now 46, and then we just had that huge drop from 46 to 33. Huge jump in the bear camp, but. You and I have been watching this sentiment stuff all year, and this is also why we've remained bullish, because the pain trade is like this crowd is wrong.
Yeah.
What's kind of crazy is that the bull side didn't grow enough to actually justify a correction.
I was going to tell you, I was
a little bearish,
hoping,
but
I was hoping that the bulls would keep getting more bullish, because if we
Yeah.
want that correction, if we want that pullback,
Yep.
we don't want a wall of worry for the bulls to climb, right?
Yep,
like
exactly.
if you have sentiment. And again, for those who are just tuning in, if you're new to the stream, Chris and I, we have a phrase that we've said many times the last few years, which is cautious optimism around stocks. You don't want to chase, you don't want to leverage, because you can see what happens to people on Friday when people are very leveraged in a bull market, thinking it's never going to end. Same with gold, same with stocks, etc. People make the mistake day in, day out. We've been doing this for a while. Don't be that person. Don't use a bunch of leverage. But we've been talking about like a healthy correction, a healthy pullback is a good thing for the bigger picture of the bull market. If you want the bull market to continue, you should wake up each day, say a quick prayer, and say, hey, could we please get a little bit of a correction? Because it's healthy for leverage, right? You don't want the market to get too leveraged, turn into a melt-up rally, and then crash hard. That is typically how a lot of these things end. So we want healthy corrections. So to see sentiment getting right back onto the bearish side, the reason Chris and I had that reaction is because now we're like, oh, so now the room to the upside is still there. Like, stocks rally against that.
Totally justified to climb that wall of worry again. So, I mean, let's talk about this week. Like I said, price action wise, we're basically stuck inside of the Friday sell-off. There were some interesting measures on futures. I mean, this was pretty technically beating. I actually thought we'd be turning the corner a little bit more today, and the week isn't done. We might still end up the week where nothing happens, where we're not at the highs, we're not at the lows, we're just kind of stuck in the middle. We do have a monthly expiration coming up on Friday. I thought we had a VIX expiration yesterday, but anyway, I looked at this. If we go swing this way and then a recovery, you hit symmetry right there, and the market sold off. I really thought, I mean, we're not taking out the highs yet, but one thing I'm going to be watching for today is if this structure breaks at all right here to the downside, then I think this resumes the high is in play. The low is possibly, going to be retested. But, of course, we could sit here and watch this market all day, just try to chew into that inefficiency from Friday sell-off, get all the way back to the highs. And then what happens? Are we going to have another one-day sell-off tomorrow? Probably not, in all honesty. I just think the market might cling to, hey, no news is good news. Financials are healthy. Earnings are good. TSM is a big semiconductor that's in the AI space. Everything looks good there. It's like if we don't have a miss in the fragile everything, it's like this whole idea that the market is price perfection continues to be the narrative and still drive prices higher. And now with sentiment, having that big drop in bullishness and climbing bearishness, I just feel like, well, the pain trade remains to the upside, and this upside risk persists. And this is why it's like, I honestly, like, I'm probably like this week, for example, like I could have survived the trade last week for a nice winner. I rolled the trade out to this Friday, thinking that we would, either have a bit of a continuation, retest the lows. I need price this week to be below 66.40 on two trades that I've rolled out from September to now. And if it is great, if it isn't, then I'm going to take on some heat. I'm not going to roll it for a debit to try to extend the life on digging the hole a little bit deeper. But I would like to see, today, for example, if we've had some pretty wild swings this week, by the way. I mean, gaps galore. We've had, this is a 1.2% gap, a nearly 1% gap, 0.8% gap, 0.4% gap. Like that's this morning. So we've had a lot of intense movement, although price really hasn't gone anywhere.
Yeah, you've still
outside
got
of
a
your
bit on volatility, right?
Yeah,
Like you've
for
still
sure.
got, you're talking about a 20 VIX still, not
Yep.
not super high, but relative to what we've been used to.
And sticky, like sticky at 20. It's, I mean,
Yeah.
this thing has been going from 19 to 22,
Yep.
19 to 22 for the last several days. This is not easy to trade. I mean, the process that I have sometimes in the morning is here's an example. I mean, you got to let the market makers do their job. So even Friday, I made money on Friday morning. I made money Monday. Tuesday ended up I mean, the day was down, up, and then back. I survived the day on Tuesday. And then Wednesday was up and down. We made money. It's like, despite the volatility, it's actually been market makers have done their job. The plus minus on the day has been something we can trade and keep the market contained with, which has been helpful for just some premium selling. I'm curious how, maybe I can look at the same thing today, tomorrow. I'm curious, like, do we have a directional day? It looks like we've had a lot of direction, even though from the open to close, it's been minimal price action, just a lot of volatility. We're talking like, 1.9%, I think was Tuesday. That swing was up 1.9% and then fell. That was when we're going to stop using China oil. And I don't know if that's like cooking oil. I think that's what the drop was late in the day, but the thing dropped like 0.8%. That was the same percentage reaction we had when Trump said he's going to fire Powell. That's how aggressive that was at the end of the day, Tuesday.
Right. Market's on edge. That's
man. And then 1.6% decline yesterday and then rallied off of that low. I mean, it's like 1.6% down, 1% up, all in the same day. That's a lot of volatility, dude.
It is. Yeah, we've been moving. I mean, everything. You've been getting some that the last 2 days ago, NASDAQ, S&P 500 intraday, huge spike down, rebounded yesterday. We shot through, had a sell-off in the afternoon, like you were pointing out with the cooking oil thing.
Yep.
I mean, again, market's just on edge. They're watching every development on, you're back in the saddle in terms of volatility surrounding uncertainty of China-US trade. And I think, I keep thinking about this, and I feel like the taco trade is in play until it isn't. So
did I show you this? I don't know if I sent you this on Discord. Let me see if you can see this right here. This is
I don't know if I saw this somewhere or if you sent it to me. I can't remember.
Okay. President Trump moves the market with Truth Social. This is all 2025.
Yep.
1, 2, 3, 4, 5, 6, 7, 8 times. And obviously there's been a lot more tweets and posts and things like that, but 8 major comments and 8 major backpedals of threat, backpedal. And not only has it coincided with the, dramatic turns in the S&P, but it also coincided with major turns in volatility. So it's like, we're allowing one person. And I thought the market was doing a better job of kind of ignoring this stuff post Liberation Day, but we've let one person dictate just a bunch of noise, but also it's just fueled more fire. It's like the narrative isn't really changing. The government is spending money. We're operating at aggressive fiscal policy. The Fed is now coming in line. The Fed is cutting not because of inflation. The Fed is cutting because of a weakening labor market. If that narrative isn't going to change, I mean, now we have like 90+% probabilities that the Fed's cutting October and December, and likely in Q1 again. Like, these are now baked into this like melt up. Again, I go back to that sentiment thing. It's probably just climbed the wall of worry. This does concern me, literally concern me, for the look of the market if we go to fresh highs without having a decent ventilation. Did you see that we have 5x leverage now? 5x leverage instruments on NASDAQ and S&P and individual stock ETFs. Like, unbelievable, dude. Like, that's the type of crap that needs to fail. Sorry, I didn't jump right in and go after it, even though it's just another reason it kind of stacks up of like, yeah, this will end badly. So if everyone is planning on 7,000 plus and everyone's taking the over on, that's the other thing that's kind of confusing. If you poll market participants right now, we'll just say the retail crowd, people are putting the over on 7,000. So not the under. It's like that by the end of the year we're going to be over 7,000. I'd love for us to get there, but for us to get there first, I don't think the market ends well in 2025, or it certainly has a much bigger correction coming in, like, let's say February to April 2026. I don't know how we can keep sustaining this without having like 2019 rolls into a 2020, 2021 ends into a 2022 that started a bear market.
Yep.
It's just this can't keep going like this, because this consistent price to perfection, price to perfection, price to perfection. We're 40% concentrated in 7 stocks. It's nuts, man. And the reason I think we also had that pullback is the market breadth indicator is not really supporting these all-time highs. So that is still a red flag where, I mean, nothing is broadly rallying into this. Now, this may be looked at as a buying opportunity if we all of a sudden shoot up to like, 60+% of stocks are above the 50-day moving average. But when we're sitting so near all-time highs, we're literally less than 2% away from all-time highs. And we're only at 47% of S&P stocks are above the 50-day moving average. Okay. On the NASDAQ, it's even, I mean, it's right there too, 51%.
It is crazy. You've had just, and it is, the story of the times, right? You just have these concentrated AI stocks that are all the hype, and everything else kind of getting sidelined. I mean, that's been the theme of it's been a weird bull market the last few, years, 2023, 2024, 2025. It's been really led by a small group. Chris, we're out of time. I want to keep talking. We'll be back. Are you coming on tomorrow early? I can't remember if we
I can if you want. Yeah, I'll be on if you want.
Okay, we'll figure something out.
Okay.
Anyways, guys, we've got our next show starting here with Miko in just a second. He's going to be taking over. Before we get kicked out of here, make sure to subscribe wherever you're watching. We also have, of course, if you want to check out Chris Pulver, his YouTube channel has been linked in the chat there. And if you want to, like that chart, Chris, if you could send that to me, that would be awesome. Maybe I could share that in our Telegram channel. If you guys want to join our Telegram, we drop charts every single day. We've got great research being published by our team in there. If you want to stay up to date with markets, highly, highly recommend. Take a second to join our Telegram channel. It's also QR code right above my screen. Scan that, get in there. We post charts of the day. We post clips from the stream, Chris and I's conversations, etc., like that. Join there if you haven't already. Up next, don't go anywhere. Miko Audu is in the building. He's going to be taking a look at some charts with you guys. Stay tuned. We'll be right back after this. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, extra clips and bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Okay, what's up people? Hope everyone is doing good. As always, let me know any markets, any pairs you're looking at, any trades you're in and you want to discuss, let me know. I do have 2 positions I'm currently watching over. I do have a long position on pound Aussie, which I hopped in yesterday, which so far is going pretty well, and looking to see if we can make a move back to some daily resistance around the 2.09 mark, and still a long way to go, to be honest, probably not even halfway. So bigger swing trade with this one, but momentum is looking good. I'm liking how we're positioned on the higher time frames. Really, the idea of this trade is to take advantage of what price has been doing for the past like 2-3 years now, which is a pretty continuous uptrend here. We've had a lovely break and retest off this recent high. We had that momentum from last Friday, crazy move on the daily candle there, huge candle engulfing about 2-3 weeks worth of price action, and all I'm looking to do is to see if we can bet on the continuation of that and go and of course hit the next level of resistance. So that is one of the positions I'm currently in. I'm also looking at Euro Aussie as well, because I do think both will likely make a similar move. And of course, they're very correlated. This is already risk-free, so I don't mind hopping into Euro Aussie as well and see if I can take advantage of that. We can take a look at that in a moment. But I'm also in New Zealand yen long as well. And I am leaning towards a bearish bias on the yen. I really like where the opportunities do like on the yen pairs, especially with pound yen as well. There's no entry just yet for pound yen, so I'll be watching that quite heavily over the next few days. But I am in New Zealand yen, and I did hop into a long early hours of this morning around 6 a.m. UK time, and hasn't really gone anywhere. Price is still at my entry, so we're going to see how this does eventually get going. I will look for reattempts if I do get stopped out underneath this low here as well. If price does push back into support here, I'll be happy to take some more longs. And the overall goal of this is to see if we can get the continuation of this uptrend back to highs, and again betting on some yen weakness. And like I said, pound yen also looks really, really good to the upside as well. And if I scoot to the weekly chart, you can see what pound yen has been doing for the past, again, 2-3 actually since COVID. Yeah, since 2020 we've been in a very monstrous uptrend, and in my books it looks like we're very likely to get back to recent highs. So well, I say recent, that's back in May 2024, so it's quite a period of time away, but I do think we're likely to get there. I'm just not seeing good entries at the moment because we are testing the supply zone. Do I really want to be finding buy opportunities in that supply area? No. So I'm waiting for price to see if we can break through, then look for some intraday pullbacks to again hop into some buys, at least the push back into here, but more so back into 207 mark up there. Or if we do go for another sell-off, I'll be happy to take some longs at the lows there too. Again, looking for that continuation. So I'm looking to attack the yen pairs to the upside, banking on some yen weakness. We'll see if that does play out. USD is also on my mind as well. I don't have any opportunities just there yet. What's up, guys? Hope everyone is doing good. What's up, Yoshi? Hope you're all doing well. Of course, any chart recommendations, just chuck it in the chat. I think we'll go through some USD pairs. I'm seeing some USD comments there as well. So yeah, we'll go through some USD pairs, which is actually, again, where some of my interest is. I quite like pound USD to the downside. I quite like Aussie dollar to the downside as well. So we'll go through both of them. But yeah, I think it's a bit too early to short, so I am holding my horses right now. I'm not jumping into any shorts just yet. I like the momentum we're seeing on the daily candles, some bullish momentum coming into play. I still do expect to see a push back into support here around 1.315, so that's still very much my goal for pound USD, and I'm still looking for USD strength as well. We'll take a look at the dollar in just a second. But the plan for pound USD is basically, can we respect this zone here, this lower high? If we can retain that as resistance, don't break structure, so don't break above it. I'm looking for a lower high to form here and eventually the market to roll back over. So that's the swing trade I'm after on pound USD. But if I do scale to the lower time frames, yeah, price doesn't look quite ready yet. We've had a pretty commanding move up, and the way I like to take my trades, I like price to kind of settle first, maybe consolidate a little bit, and then try and find the entry just before price does make the move. I like to be a little bit late to the party rather than early. Sometimes that means I might miss a move, but if I'm a bit later, it means I'm kind of avoiding all the chaos and getting in just before the market does move. And right now, I don't have that situation. I quite like when price finds resistance, has a move down, at least goes to retest it, or perhaps even spikes through, and that's when I look to find my entries. And yeah, we're trading in a nice zone, so it's definitely a market which I've got my eye upon, but it's just not quite ready, at least in terms of my rules or how I trade. So over the next 24, 48 hours, something could materialize here, even if I scale down to the hourly chart. Yeah, I mean, I like it because it's slow and corrective. It means we're not seeing crazy bullish momentum, which might indicate a reversal. So it does look pretty corrective. I'm getting, it looks like a pullback, so that's a good sign, but just no opportunities to jump into a trade. And Aussie dollar, the other USD pair, which I really like as well. I do think there's a lot of downside to be had. For this currency pair, I'm looking for a push back into this support level. I generally thought price was going to go and hit that level on Tuesday, I think. Yeah, when we had that crazy sell-off and Aussie was super, super weak, I generally thought price was going to go and hit the level, but no, price has pulled back, and perhaps it might give me an opportunity to get into the trade. This was the zone I marked up at the start of the week. I was hoping for a pullback into this area, and again, some more downside. All I'm looking to do is bet on the continuation of this bearish momentum, which has come into play for the past couple of weeks or so. I really like this area here. If I whip out the fib, more so around the 0.5, 0.618, which is a really healthy zone, and where I take most of my shorting opportunities, or of course longs. Generally, this is where I'm looking for pullbacks, and I'm looking to see if we can find a continuation there. So again, Aussie dollar doesn't look quite ready for me yet. And if I jump over to the DXY, we've finally seen some downside momentum for the dollar. But again, I'm looking to see if I can find some longs. I like this area here. If the market can dance, find support in this level, I do think there's some upside opportunity. I was a bit skeptical coming to the week because price was trading in this zone, and this is typically where the sellers are sitting. You can see we do have a pretty bearish trend here, so if the market is going to form a lower high, well, you probably would bet on the lower high forming around this area here. So if you are a buyer of the dollar, unless you're very intraday, you want to be in and out the market, it didn't make too much sense getting long in this area. If you're looking for more of a swing trade, you want price to approach demand, support, and from these areas it would make a bit more sense to try and find those swing opportunities. So as price has approached here, same situation for pound, same situation for Aussie dollar. We've only just got there. I want price to kind of relax, maybe consolidate a little bit before I do anticipate dollar looking to reverse. But that is the plan I have. And again, if I zoom right out to the weekly chart even, I quite like where we're situated. We've got this low here, this low here. Is price potentially doing the same thing for another move up? It could be. We are slowing down, and you can see on the weekly chart, a few weeks ago we had a really aggressive wick to the downside. So it looks like price is finding a lot of support here. Perhaps the dollar is getting ready to push. So I can see that as a potential outcome. I can see dollar potentially finding support here and reversing. But it's going to be very, very crucial in terms of what we do here. And over the next couple of days, 3 days, 4 whatever days, I will be monitoring price, and that will help me understand if, okay, maybe the dollar does actually want to continue back to lows, or no, we are finding support. There could be some nice buys, and of course that will set up pound shorts and Aussie dollar shorts as well. Those are my two favorite USD pairs. I'm not the biggest fan of euro dollar, although of course, if dollar is going to be strong, you would expect euro to fall as well. It's just I don't like how it's set up, or at least what's the word I'm looking for? Pound USD and Aussie dollar just look better. That's basically what I'm trying to say. But of course, if USD is going to be strong, I would expect euro to fall as well. But again, in a similar case to the DXY, price came into this zone. Again, euro's been super bullish for since the start of the year, pretty much since 2025. We've seen a pretty commanding uptrend, and you can see we've got these higher lows here. This is again a territory where maybe another higher low could form again. So as a seller, this is not really where I want to be looking to position myself. I want price to come up closer to the sellers, closer to areas of supply where it makes a little bit more sense to short. And then of course I'll judge price if I do get the entries I'm after as well. But similar to the DXY, if I expand to the weekly chart, really aggressive wicks at the highs there. So it does look like euro is really struggling to continue this uptrend. Perhaps we're getting ready for a bit of a nosedive. That could be the case. So it's a bit of a waiting game at the moment because we have seen some nice retracements, but as I've said, I don't think we're quite ready to short them yet, or at least I'm not anyway. So again, over the next 24, 48 hours, looking to see what we do in these areas. Again, looking for a bit of consolidation, waiting for price to find resistance, then hopefully I get a short maybe tomorrow or early next week. But for now, that is the plan, and that is the bias I'm looking to trade. I saw someone mention dollar CHF. That one's a bit of a tricky one because I'm not necessarily looking to buy dollar CHF, even though I am leaning towards more of a bullish bias on the dollar, purely because CHF has been super, super strong as well. And if you go look at the other CHF pairs, CAD CHF, Aussie CHF, New Zealand CHF, Pound CHF, Euro CHF, all of those CHF pairs, and even CHF JPY, but all those CHF pairs have been falling aggressively. So Swiss has been a really, really strong currency. And if I'm going to buy dollar CHF, I'm essentially saying I'm expecting dollar to be stronger than CHF, which I'm not too sure if I believe actually. Maybe that does come into play, but even from a technical standpoint, I'm seeing a pretty convincing bearish trend here. And yes, we're fading at lows as well. If I go to the weekly chart, you can see we're providing some wicks. So it's a similar case to euro just flipped. But I'm not, in euro's case or in pound's case, I'm not going up against the CHF. So that's the only aspect I don't like. And then if I drop to the low time frames, we've had a pretty aggressive sell-off yesterday as well, which I'm not the biggest fan of. Maybe price does find support here. Maybe we do push to the upside, but I just think pound USD, Aussie dollar, even euro just looks like a more attractive short opportunity. So I'd rather put my eggs in those baskets than try and see if I can swing dollar CHF back to highs there. I think that's a bit of You're asking a lot there from dollar CHF. Maybe if CHF does turn around potentially, but just quick browse of some of the Swiss currency pairs. And if we expand to like the daily chart, these guys have been falling. I mean, you could argue pound CHF is at support. Perhaps you could be looking to turn it around. That could be the needed move that dollar CHF does need, possibly. But I like just to follow what is in front of me and what I'm seeing. New Zealand CHF, very, very bearish there too. If you go take a look at Aussie CHF, that's pretty bearish as well. Although, again, that support struggling to break through. CAD Swiss, that's been pretty bearish too. So, yeah, I don't really want to go against CHF at the moment. I think pound USD, Aussie dollar, even euro is a smarter trade to take currently. But things can change pretty quickly. And for New Zealand dollar as well. New Zealand dollar I like to the downside too. Again, another USD pair. Again, if I'm expecting USD strength to come into the market, I would be expecting New Zealand dollar to fall. And if you look at the bigger picture, it has been a market that is falling. I do think in the longer term, we're probably headed back down to that support level. So New Zealand dollar from a swing perspective, I'm looking to sell the rallies. If price does see some upsides back into structure, I'm more than happy to keep shorting this one. I won't be looking for one big move all the way down here. You could do, but I'll be looking to try and see if I can get 2, 3, 4 trades along the way down. I might leave some positions to run if things look really, really good. But from a top-down perspective, bears are in control, so naturally I want to be a seller. I like this zone here. Of course, this gave us our last high before our last low. But the reason I'm not really looking to short in this area is because if you look at how price has been moving, every time price does sweep a low, we actually have a pullback. And we're back in that same territory again. Price just swept that low. Are we going to have another pullback? I would like price to do that because then maybe this opportunity might actually come into play. But you can see every time we sweep a low, price has a pretty big pullback. So I'm not going to be looking to try and bet on a continuation or a big swing trade in these areas. Sure, lower time frames, you can get away with it because you'll be in and out. But from a more of a swing bias, you want that bigger pullback. So I'm kind of hoping we see something like this happen over the next few days for New Zealand dollar. Again, whether we do that or not, no idea, but I'll be ready and waiting. And for now, I think I would just keep my focus on pound, keep my focus on Aussie dollar. I like pound yen to the upside as well. I'm looking to trade New Zealand yen, and of course I'm looking to trade pound Aussie to the upside, euro Aussie to the upside as well, which reminds me, I said I was going to look at euro Aussie too. So euro Aussie, I'm looking at buys. This one I have to be a bit careful because we are trading at resistance, so it's not the most optimal place for a buy. But the reason why I like it is because we had, again, a similar really big impressive candle there on Friday last week. And I'm looking to see if we can push back to the highs here. Again, look at the bigger picture. It's a pretty clear uptrend here for Euro Aussie. All I'm looking to do is see if I can take a small piece of the pie back to the highs there. And if I scale to the 4-hour chart, we do have some bullish structure at the moment. We've got this push, pullback, push, miniature pullback, another push there. So this is basically what I'm looking for. If price has an aggressive sell-off, takes out that low, I'll back away. But I do like Euro Aussie to the upside. And I'm kind of betting on pound Aussie doing something similar as well. So that's kind of where my focus is. Someone's mentioned pound CAD. We can definitely take a look at that as well. We can take a look at US 30 as well. We can go through some indices too. Last time I looked at pound CAD, we were absolutely roaring to the upside. Yeah, we just created some new highs there. So yeah, in this situation, this is where I would take the back seat, because unless if I'm already in a buy, great. If I'm not, then I don't see much to do here, because we are in a pretty aggressive uptrend. If you look at the bigger picture, again, price has been doing its thing for quite a while here. But I like to buy pullbacks. I don't necessarily like buying highs, because my first instinct is when price makes a new high is that now I'm waiting for the next pullback, which may happen instantly. It may take a while, but that's very much my thinking. So once prices create new highs, as we've done now, if I was in a buy, I'll be taking most of my profit at the very least. And if I'm looking to get into a buy, I'll be waiting for the next pullback. maybe back into this area. Price has been super consistent with these higher lows. I'll still be trying to look to bet on the next one forming. So yeah, I'll be waiting for some pullbacks. I would say keep an eye on this zone here. I quite like it. Gave us this rally to the upside. Would be acting like a nice area of demand. If price can come back and tap into that level, I would say that's an appropriate place for a long. Of course, we have to watch how price gets there and what we do when we're there. But on paper, still looking to play the longs until proven otherwise. It's a tired market. I can see signs that we're slowing down and perhaps we might reverse soon. But yeah, let's not get ahead of the market. Let the market lead and we'll follow. As for US 30, we were looking pretty bullish this morning. Have we had a bit of a retracement? Let's see. Okay, if I scale to like a 15-minute chart. Okay, so we have seen some downside. So yeah, earlier on my stream, we were talking about US 30, and it looks to me that US 30 again is still very much a bullish market, and I still want to be a buyer of this. Let me just remove my drawings there. I still want to be a buyer of this. Of course, we had a really aggressive sell last week, but nothing really significant has happened. Of course, every market is going to have its period when it does have that pullback, even when indices are roaring. To me, this just looks like another pullback. Even if we do have another sell-off here, we still have a pretty big level just underneath us, which actually I was looking for price to come back and retest around just around 45k, which we missed. We might come back and retest that, but I would still very much be looking at trying to buy this. So in terms of a good buy opportunity, I like this idea here. If price can pull back, take out this low, this looks like a nice swing opportunity, especially like an hourly chart. And yeah, a push back to highs, and if we're lucky, maybe a push back to the all-time highs again. But I like this position because you're kind of betting on these higher lows continuing. You've got one over there, second, perhaps third. You're kind of waiting to buy at a later stage. A lot of people might have seen this wick here, and that have triggered a lot of long positions. But I would suggest waiting for price to come even deeper might be the smarter move. Now, of course, we may do that, we may not. Price may rally from where we are. But if we do, as long as we reject well, I do think that's a smart place to position yourself long. And of course, a pushback to highs would make a lot of sense. If you're looking intraday, this was quite a violent move. And the way price came back into supply resistance here, that is a little bit of an alarm bell, I would say. Quite an aggressive move. That might mean a bit more downside. So I wouldn't really be looking to buy here, especially with the way I'm seeing price react. I do think the bigger move down could be the smarter buy. And then we'll see from there. If we break through this, then of course at that point, it looks like we just had an impulse correction, impulse pattern. And then we see what we do at 45k. But yeah, I still want to be a buyer here for US 30, but at a lower price if we can get that. Yes, we'll take a look at gold, no problem. Of course, gold has been absolutely making waves, and I think we were actually having a bit of a pullback last time I checked. I say pullback, I'm talking about a very small one. And it looks like price is now making new highs. So yeah, this is the last pullback I was referring to, but yeah, that only lasted a good 5 seconds before now price is absolutely flying again. So have we reached 42.50? Yeah, it looks like we've just gone and wicked into it there. So yeah, gold is just hitting one big psychological level after the other. The next big one will be 4,500, which is still quite far away, but I say that and then we wake up tomorrow and price is there. The next one I'll probably pay attention to will be 4,300, and just kind of working with these levels as we go along, because that's pretty much all we can do really. In terms of opportunities, you're waiting for your next pullback. I think keep it as simple as that. You can try and buy highs, but we are a little bit corrected now, so I wouldn't really try and buy highs anymore with gold. But momentum is very strong. You can try and buy highs, so as price takes out a high, you buy on the breakout. That's when things are very aggressive. Not really a technique that I trade with, especially in currency pairs. But in this climate, you can definitely get away with it because of how aggressive the market is. I wouldn't buy highs because typically you can see after we do take out the high, we do tend to have a bit of a pullback. So I'd rather just wait for the pullback anyway. You can see here as well, we create new highs, we had a pullback, and then we continued. If you're just going to take out highs, we might have another pullback to continue. So I'd rather wait for that pullback than trying to buy the high. But you can probably get away with it depending how you manage the position, to be honest, because again, that's just how aggressive gold is. So yeah, I would be looking at pullbacks. Let's say if you're going to drop intraday, I already am intraday. Let's see if we can drop even further to the 5-minute chart. I like these higher lows prices creating. I like this zone here. This is where we had a really aggressive wicks, earlier today. And if we were to come back and retest that, we might see some more buys enter the market for another swing and basically trying to bet on another one of these higher lows forming. Yeah, gold is just absolutely flying right now. So yeah, I mean, with gold, you have to play the aggressive game. Gold right now is aggressive, so as a result, you want to be aggressive too. There's times to be a bit more conservative when the trend's a bit more light, a bit more relaxed. Then you want to be a bit more patient with your entries. When gold is really aggressive and you really want to take advantage of it, you're going to have to be aggressive with gold as well, and manage the trade accordingly too. Again, not really a seller. I don't really want to be a seller for gold right now, especially with the way we're ripping through highs. I'll just stick with the pullbacks. There will be times to sell gold, and the time to sell gold will come, but you don't want to be too early because anyone looking to sell gold, unless you're very in and out very quick, you're definitely getting beaten up by this market. So I'll be very, very cautious with the shorting opportunities. I'll stick with the buys for now. Everything's looking really bullish. I will take a look at dollar CAD and dollar yen next as well. We'll go through. So USD JPY is a yen pair, which again, I did say I'm liking the buys on the yen pairs. Dollar yen's not really one of them, to be honest. Well, it is, but it needs to come a lot deeper. If we pull back towards this area, then I'll be interested in the longs again. Basically looking for this uptrend to continue, looking to bet on another higher low and more upside. Again, we all know if we expand to the higher time frames, what's dollar yen been doing for the past few years since basically COVID, we've been in a really, really aggressive uptrend. So I do think there is still mileage to that, and all I want to do is make sure I position myself well to take advantage of that. And this would be position myself well. You're back where the higher lows are forming. We've got a gap here. Maybe price wants to fill that. Retest this area, which gave us a really strong move. I don't want to be buying in this territory here, because if I draw the upper band of this channel, this is seller's territory. This is buyer's territory. Keeping it very, very simple. As with current price, it looks like we're kind of retesting prior resistance here, turn support. So we're in a bit of a interesting situation. Is price retesting support here to continue higher? Potentially, I would wait for the break of the counter trend line as an incentive to support that idea. If price can break past this counter trend line, especially with some momentum, yeah, that would be a likely move back to resistance. As I said, I would wait for a deeper pullback. I'm a big believer in just focusing on the better areas in the market. I don't so much just want to react to what market is doing. I do, but I want to make sure that I'm positioned well, and that is as close to support, as close to the extremes of the trend as possible, which as a result actually gives me pretty good risk reward opportunities as well. So I do want to be trading around here. Maybe price does have a successful break and retest here. Maybe I do miss the move, but this is really where I want to get involved. If you are keen on the buys at the moment, then yeah, I would suggest wait for a strong break, maybe a strong 4-hour candle closing above that. That could be a nice entry itself. Stops below the low. And a continuation back to the prior high makes sense. So yeah, dollar yen, not my favorite yen pair, but I do think there's more upside to that pair as well. Dollar CAD's an interesting one. This one is still pretty bullish. Again, not so much because of USD, but more so CAD being quite weak, which is interesting because I'm still looking for some more dollar strength, but it just hasn't happened yet, which is interesting because once it does happen, maybe dollar CAD actually does explode. Of course, if CAD's still weak at the time. What I'm looking at for dollar CAD is a much bigger pullback. So this is the consolidation we've had for a few weeks. This is the breakout. I'm effectively looking for price to pull back closer towards that territory, perhaps retest it before I do look for my next long position on dollar CAD, because it looks to me that price is breaking out of this bearish structure. We're just going to take out that high. So my plan is, can I look to follow this trend here and catch the next wave? That would be great if we can see this type of pullback. Of course, if you zoom in a bit more intraday, dollar CAD has been looking pretty bullish. Looks like we're having a break and retest here. Perhaps we could see another push back to the high. Not really my type of trade. I don't like buying right at highs, as I mentioned earlier. Typically once price creates new highs, I'm always getting prepared for the pullback. And you can see we're just going to rip through some major resistance here. This is not really the prime place, prime real estate for me to be looking to take a buy, especially as more of a swing trader. I do drop intraday to take some entries, but again, my goal is to try and swing trades to the next big high. So not the most optimal place for a buy, hence why I'm waiting for a pullback. Again, I would still say I'm bullish on dollar CAD, but I wouldn't mind for a slight bearish counter trend to form for a bit more of a pullback. But yeah, that's kind of where my focus is. Looking to short pound USD, looking to short Aussie dollar. Not quite ready yet, so we'll watch that over the next few days. I really like Euro Aussie to the upside. I'm in pound Aussie, I'm in New Zealand yen, and hopefully I can be in pound yen as well. But we have approached the end of my segment, guys. I really do appreciate you guys having me on the stream. I hope you have found it useful. Hopefully we'll be back next week, so I'll see you all there. But thanks for having me on, and I'll catch you all in the next one.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. Happy Thursday. How's everyone doing? Hope you're well and hope you're having a good week so far. Sluggy. Hello. So I'm in the S&P longs. I took an additional entry yesterday. It's actually quite aggressive. And fortunately, well, I'm going to say this, take it with a grain of salt. Fortunately, there was no stop loss because it's a long-term position. So it's essentially DCA, no stop loss. So I entered on the pullback here, looking for a break and retest of the previous highs and a rejection off the fib level. Ended up coming much lower, down to the second entry, and now back in profit. So not much of a story on this one. A bit of a rocky start on the additional position, but overall, very, very healthy. So it's a really nice position. Looking to take the S&P to around 7,000. We'll see. Looking to trail stops pretty soon. If we can break the previous highs at 6,750-ish in that area, then I'll look to trail my stops on the lower two entries towards break even, and then I can just cover some downside. Pound Swiss is still doing absolutely nothing. I've worked out I have earned roughly 0.15% back on swaps on this one. So my risk is now 0.85. I think that's the right maths. 0.85% risk on this trade, which is quite good, considering the longer I hold it, essentially the downside is just removing itself day by day. So really no problem with that one. Still in pound yen, this one has pulled back quite significantly, actually. Managed to enter right in this sort of tweezer, or whatever the people call those double top things with the wicks. Really nice move down. I was actually anticipating that the yen pairs would come and correct this gap or fill this gap. And this was obviously from the Japanese PM news, which hasn't happened. I do still expect it to happen. Absolutely. I mean, if you look at FX markets, specifically major FX markets, you will see we do get gaps rarely, and when we do get gaps, generally they're filled within normally a couple of hours, but in this case, obviously, it's slightly bigger news, so it might take a bit longer. But that is what I'm expecting at some point for this gap to get filled. Euro dollar, I re-entered a short on this one. I think this is probably my favorite setup, actually, out of all of the ones I've got open. So Euro dollar, I took my initial short on this one and managed to time the exit almost perfectly. So I closed the original short as the dollar approached. I think it was, hold on, let me just double check. Yeah, 99.5. It was coming into that area, and I was like, you know what? As I've said, basically for the past 2 weeks, that's kind of where I expect bears to step in. We've had the pullback, technical setups there. The edge finder is slightly bearish. I'll show you that in a second. So we've got the bearish trend with the moving averages. We've had a pullback into previous structure, sort of the break and retest pattern, and again into the fib level as well. So I think technically it's like textbook for the way I trade. And the fundamentals are not super strong. It's definitely not ideal, but there is the argument to be a seller. We do have a score of -2. So overall, not really that much, but you know, is edging towards the short side. Just realized I'm halfway off the camera. There we go. So yeah, I like euro dollar, and I'm still in my New Zealand US dollar short as well. This one's in a bit of drawdown, but nothing major. All of my other trades are covering this small loser. But yeah, that's all I've got open. So not too much of an update. Youngest, I think I saw you say earlier that you changed your name. You used to be Youngest Millionaire. So hello. Broadway, hello. Lupa. Loop. I remember yesterday you told me your name, but I can't remember what you said. My apologies. Sluggy, pound Swiss in the green. Yeah, it's one of those trades where it's slow, it's painful, and you know, you come into a bit of profit here, or I come into a bit of profit, and maybe, just maybe, we can have that final push to break these highs and send this trade going. But no, as soon as we push higher, we end up coming back lower. But again, as I said, it's one of those trades. I really don't care, because I've been holding it for so long, and we get such strong swaps. For anyone that actually, I'll tell you what, let's just have a quick look at the swaps. For anyone that doesn't know what I mean by that, I'm sure most of you do, but for anyone that doesn't, swaps are essentially what you get paid, or you pay to your broker for holding a trade, and it's based on the interest rates. And this is something you should be watching. So generally, a lot of prop firms won't take into account the swaps. You will just pay swaps regardless of whether it should be positive or negative. It doesn't matter, which is one of the downsides. But the other side, pretty much every broker won't pay you the full swap amount. So on pound Swiss, we get paid 4%. So obviously the base currency, so the UK or the sterling, is the interest rate by the interest rate by the Bank of England is 4%, whereas the Swiss National Bank is at 0%. So there's no additional, no takeaway from that 4%, giving us just a flat 4% payment to be a buyer. Now, on the other hand, you could do the opposite, like dollar try, you get paid to be a seller, because obviously the Turkish interest rate is at 40% compared to the dollar's measly 4.25. So there you go. That's basically what it is. Collecting tiny swaps, yeah, that's the way. Just a little carry trade. You love Wednesday. Yeah, you get paid triple swaps, don't you, from the weekend? It's nice little rollover fee there. Difference between interest rates and FX. That's exactly it. Yep. Okay, so dollar yen. We've covered pretty much everything already, I think yesterday, but we'll just do it again, I suppose. Nothing's really changed in my view. Dollar yen. I would still quite like to be a buyer. I'm still pretty bearish on the yen. I think the dollar does still have some upside to come. But again, as I've mentioned multiple times, I'm just very concerned about being a buyer in this area, because although technically and fundamentally it makes sense, we've still got this gap. But the main problem, or the main cause for concern, is the MOF intervention that we could get at any point. Now, I've not really seen many signs or any sort of glaring signals that we're going to have an intervention, but we also need to remember that we basically get no signal, we get no idea if they're going to intervene or not until it's too late. And then very likely if you're a buyer, your stops have already been taken out. So I'm just not willing to put myself in that position right now on dollar yen, although I am keeping an eye on it. Dollar Swiss, I don't really have much for dollar Swiss. The dollar CAD, I'd still quite like to be a buyer at some point. Dollar Swiss, I'm fairly sure is still the top setup. Let me just double check. Wait, hold on. Dollar CAD, am I talking? Yeah, dollar CAD. Dollar CAD still the most bullish setup with a score of 10, so it does make me want to be a buyer. But this trend is just far too aggressive for me to get in. There is no meaningful or significant pullback here. So I'd need to see maybe down into this previous low. That would be quite a nice double bottom to buy from. It would also come meet our 100 moving average, or even this low down here, very likely would come meet our 200 moving average. But either way, I just can't buy it right now. But price is just rocketing, really. There is nowhere to get in. So I'm just sat on the sidelines. Adding more to my shorts on New Zealand US dollar. Fantastic. Yeah, I think New Zealand US dollar is a pretty simple trade. I think it is. I think I need to highlight, underline, and bold the word I think. Is a pretty straightforward trade. But of course, doesn't mean go and just full margin. Is long in US 30 still on the table fundamentally? Yes, I would say so. Edgefinder still bullish with a score of 7, similar to, in fact, exactly the same as NASDAQ. S&P is trailing slightly below with a score of 5. So US 30. Now, I think that we're coming into really two situations here. Well, I'm going to say this is going to sound so obvious, and it's going to make me sound a bit stupid, I think, but these are the situations I'd be prepared for. Is either we continue higher, so we'd come break past this high, retest, and then continue higher. That would be ideal base case. Second option is we come back down into these lows and then maybe continue higher. Or we just continue sideways. And the reason I think we might just continue sideways is the government shutdown, because we don't really have any data coming out. So there is that option there, because there's nothing really for us to trade from on a US economic front or labor market front. The situation, if we continue higher, this could be essentially, as Nick's been saying, is no news is good news. We've already had the S&P continue higher, and it would basically just be a trend continuation. However, if we end up coming lower, I think it would very likely just be due to Trump tweeting something. I think the likelihood is low, but trying to predict what Trump's going to do is very difficult. So I wouldn't be trying to do that. Switch from G to white collar. Love your style. Switch from G to white collar. Not sure what you mean, Sluggy. Do you mean the shirt? Or my... I'm not sure what you mean by that, but I appreciate it either way. You're short dollar CAD, but tight stop. Fair enough. You taking just a price action trade or a technical trade? Short UJ. Yeah, I think short UJ makes sense. I understand the idea and the theory behind it, but again, fundamentally, I just can't do it because I'm pulled either way. Because what we've got, again, I'm going to repeat myself, is we've got a dovish PM in Japan. Path to normalization is pretty much out of the window, or at least significantly dampened. They're both bullish factors. The US dollar could continue higher, big could. But again, as I said, we've got that intervention risk. We do have this gap lower, so you could be looking for some short back into the gap. That makes sense. And again, that's kind of the approach I'm taking with pound yen. Although I'm quite bearish on the pound anyway, so that's my way into that market. G as in real G. I appreciate it. Hello, why is gold still ripping higher despite strong US data? It's a good question. It's a very good question. Don't know. Gold is just doing what gold. It's doing its own thing. It's one of those things. We've got a lot going on. Well, actually, no, we don't have a lot going on. It's kind of the opposite. We've got government shutdown, so basically no data, as we've already said. We've got rate cuts, Fed's cutting rates, ECB's on hold. We've got the Bank of England kind of on hold as well. But generally speaking, we don't have any alternatives for investors to go to. So when we're looking at gold, it can't just be as a safe haven. That's kind of too simple, especially when we're considering the current factors. So we've got no geopolitical risks on the table, really. I mean, you could say maybe the US and China, but that's kind of dead in the water already. So in terms of rate cuts and rate holds, where investors want yield, they want return. So where are they going to go to? Well, if all the central banks are cutting rates, or all the major central banks are cutting rates, investors are going to fly into gold. We've also got central bank buying as well. And I think there's just a lot of sort of hopium and optimism around gold, generally speaking, within institutions and public as well, like general population. So I think that there's reasons for gold to continue higher. However, I am very concerned that it's just a bit too high. And I know that's a very risky thing to say when you're in the financial markets, to say it's too high, but I think it kind of is getting to the point where it's objectively too high. And I don't mean just the price. I'm not saying gold can't ever be at 4,000. Obviously, that's not what I'm saying. When I say it's too high, I'm talking relative to sort of the averages in the market. So the 200 moving average, even like a VWAP, even shorter term moving averages or shorter time frame moving averages like this 50, it's very, very far away and it's very deviated. And the way the markets work, they're very efficient, and they always, well, excluding things like meme coins and penny stocks and things, they will always revert. They will always come back to what is known as a fair value. Whether gold's at its fair value, I don't know. I would say it's not, to be quite honest with you. I don't know really entirely why it is doing what it's doing, why it's going so strong, so high, but it's not my job to really figure that out. My job is to try and trade it. So I am pretty much completely away from gold mentally. I've got no interest whatsoever in shorting or going long. I have to see something happen in terms of downside, whether it be on a weekly, daily H4. I just need to see some sort of pullback, just to sort of rebalance a little bit, I'd say. Ceasefire was broken again. Was it? I must have missed that. James Jamez, Mez, how are you? Yeah, I'm good. Thanks. I mean, I nearly had a seizure trying to read that, but yeah, I'm good. How are you? Decades of money printing worldwide has led to this. Yeah, there is also that. I think there is a lot of talk about, I mean, this has been a topic for a while, but I think more widely spoken about now is how fiat currency is becoming basically just crap. Excuse my language, but I think especially the younger generations are going to things that hold more wealth, especially the smart ones, which a lot with the internet, TikTok, Instagram and things, people are becoming a bit more smart, especially when it comes to money. You see sort of both sides. You got the people that doom spend and whatever that trend is, and the people that obviously don't look after money, like extreme side. But then if you go into sort of the investing side of TikTok, the smarter side of sort of social media, you do see some pretty intelligent people that are quite young. And I think a lot of it is people moving away from dollars, pounds, euros into things like Bitcoin, gold, property, whatever, anything that's just not cash. I'm not sure. I think I went on a bit of a tangent there. I'm not sure what my point was, but hopefully that made sense. Hopefully that whole string of sentences was for something. Anyway, you're in a long position right now, tight trailing. Yeah, good. I think that's probably the best way. I think if you are wanting to be in gold, obviously being a buyer is probably the easiest way to go, with very, very very sensible stops and yes, aggressive trailing, because the risk is, we could fly much higher and just continue higher till the end of the year and just see this continue. But on the other side, we could just see something like that, where we see, one person take profits. And when I say one person, I mean like an institution, someone take some serious profits, and then it's a domino effect, and that will then trigger more profit taking, more profit taking, more profit taking. And then gold is it's kind of done for retail buyers that are stuck. Again, I'm not saying that is going to happen. I'm just saying that is a risk that we could be facing at some point. And that could be tomorrow. It could be next year. It could be in 2 years. Who knows? Gold at 4K is undervalued. I would say so. Yeah. I mean, in the grand scheme of things, I think I'm, I'd be perfectly happy saying I think gold could go 10 to 15K in maybe 10, 15, 20 years, maybe even quicker than that. I don't know. But when I said overvalued, I was talking relative to sort of indicators and benchmarks, not in terms of actual value, if that makes sense. Nat gas long since winter is coming. I don't know. That does make sense, but as I always say, nat gas. I've never once placed a trade on nat gas. I've no real experience in this market, and it's not something I really keep a close eye on. So I couldn't tell you really what to watch out for, or even its seasonal patterns. I really don't know. I know I was looking to be a buyer at some over the past couple of weeks. I would still quite like to buy if we can come down to around 2.5. That would be then, yes, maybe I'll take a stab and see what happens. But until then, I'm kind of just leaving it alone. Gold will be 5K. Yeah, I'm sure gold will be 5K at some point. What's your targets for the S&P 500? I would say I don't really have a hard target. But I would be quite happy if the S&P can get to, let's say, 7,000 by the end of the year. I'd be a very happy chicken in that case. But yeah, I don't really have a hard time. I think I'd say 7,000 is kind of like the next major psychological level, and I think that's if the S&P is going to continue higher for the rest of the year, 7,000 will be the magnet that people are aiming for. Gold should be way higher. Yeah, again, I just want to reiterate, I wasn't talking in terms of the actual price and value of gold. I was talking, when I said overvalued, relative to indicators and Bollinger Bands, moving averages, VWAPs, everything is screaming overbought, which doesn't mean it's going to fall. I'm not saying that it's going to collapse, but it just keeps me out of the market for now. James, get this as much as I hate crypto. I thought to myself, how can I trade on Saturday and Sunday Bitcoin futures? Yeah, that makes sense. Bitcoin futures. I mean, I'm going to be honest, on a weekend, probably go and touch some grass, get outside. Hyperinflation narrative continues. Short-term gold is overstretched. Yeah, that's kind of what I'm saying, Slug. Yeah, I would say that as well. Looks like, yeah, short is coming along so far. Very nice. Yeah, I mean, it seems to be pulling back a little bit. We've not really seen anything really since Monday. We had a little bit of a correction, but overall, it's pretty much just sideways. Thoughts on silver? Now, I would say silver is criminally undervalued. Again, I would say relative to its indicators, then yes, it's stretched, it's overbought. However, it is coming to my end of year target, which is 55. I would say gold can go to 150 to 200 very easily. And I think it could happen very quickly as well. I'm not going to put a time limit on that. I don't want to commit to something like that, but I think it is coming. And I think it'll probably happen faster than what most people are expecting. So I would love to position for it, but it's a case, same thing as gold. How can I get into this? I can't. It's too high for me to start building a DCA position. I tried a couple of attempts, but I just took profits and I didn't feel overly comfortable stacking into anything after this crazy run. So I need to wait for a pullback towards 40, 45, maybe even 50. Then I would start buying again. But yeah, for now, just waiting. My outlook on pound yen. Yeah, I'm short on pound yen as well. So you can see here, this is my position on pound yen. Pound dollar falls. I would expect pound dollar to be bearish, yes. What's your outlook on pound? Yeah, all right, that's the one I just read. Crypto is just another vehicle. Yeah, Axel, I kind of agree. The thing is, in my opinion, it doesn't matter, if you hate crypto or you hate gold or you hate something or you love something, it's not going to change the value of it. You can position around it maybe if you've got some serious reasons as to that feeling, but I would say, they're just lines on a screen. All we can do is try and make money from them. Morning, Swiss yen. Let me just quickly check the schedule. I'm fairly sure I've got another couple of minutes. Yes. So we've got Marco coming on in about 5 minutes or so. So I can go over Swiss yen. Oops. Yeah, so I would say Swiss yen likely to continue higher, but there are some drags on Swiss yen. So what we've got to account for is obviously the intervention. I'm just thinking while I'm here because I've not really thought much about Swiss yen over the past couple of weeks. Let me just see what the Edge Finder's saying about Swiss yen. So we've got a negative score. Overall, Swiss yen shows a slight bearish edge, primarily driven by weak fundamental factors. Technical indicators show positive trend momentum and favorable seasonality, offering some support. Market sentiment shows a slightly positive bias, primarily from retail positioning, while institutional COT data remains neutral. COT is still paused, so it doesn't mean that much. But yeah, I think overall, it just seems like a continued buying the trend type of market. But as I've already said multiple times, just watch out, because what you don't want to do is stack into a long, maybe even build a DCA position like this, and then we get some crazy intervention and you just get wiped out. Yeah, we've got the gap on pretty much all of the major yen pairs as well. So I would be very cautious about being a buyer of these markets until we get that gap fill. If we get the gap fill, maybe yes, then it's a bit more reasonable to start taking longs. But for now, I don't really see a valid reason for going long just yet. Yeah, it doesn't really sound much is going on today. Seems like quite a boring, slow day. Platinum's doing quite well. Platinum was a really strong reading on the Edge Finder. I'm not sure if it still is. It's gone down to 7, but that's still pretty good. So I'd quite like to be a buyer of platinum. So I was looking at it, I think around this period here. But the issue is that there's no entry. I can't find a way into platinum. So I'm just, again, sat on the sidelines, same thing as gold and silver. I need to see some sort of pullback, maybe into the previous low, and then I could warrant being a buyer. However, for now, it's just a waiting game. Just applying patience at the minute. You're long on pound dollar. Why? I don't mean why as in why would you take that? I mean, like, I'm curious what the reason was for being a buyer. Rather scalp USD and hold a position. That makes sense as well. I think that's also a valid approach. If you are cautious about the indices equities markets, I think scalping momentum is probably the best way. Platinum's been a monster this year. It has indeed. Plat's following suit. Yeah, I mean, platinum seems to be the lagger, but obviously we'll be catching a drift off the gold and silver train as well. Return for the year on what? On just FX or for all of my portfolios? So I don't think there's really anything else. There's pound Canadian, actually. I saw someone mention that in the chat when I was in the waiting room. And I was going to talk about it, but I think I forgot. So pound Canadian or pound CAD is getting a score of 9, which is pretty good. And I think actually this made me look like a bit of a silly goose today, because I'm fairly sure yesterday we were talking about pound CAD and I didn't like the look of it because it was just sideways and I didn't really see much. Since then, it's done very, very well. So I'm looking for maybe a long position. So basically just looking for a retest here and potentially going long. I mean, it's a little bit aggressive because let's just check the fib. Yeah, so it wouldn't meet the fib and it wouldn't meet the moving averages. So it's not really within my strategy, but I would maybe attempt a small, lower risk position. Just FX. It's not that great this year. I'll be honest. I had a pretty negative first quarter of the year because I was trapped in dollar longs, and obviously the dollar's had a crap year. So yeah, it's not great. I think I'm up maybe 8% this year on FX alone. But I don't know if I can show just before I go. Just give me a second. I'm not sure if I can put this on screen because I don't know if I can hide certain information like the balance. I don't think I can, but stock portfolio is up 119% this year. So in terms of returns, I'm completely cool. That's why I'm not stressing about my FX portfolio. Buying New Zealand CAD could be a nice hedge against New Zealand US dollar. Buying New Zealand CAD could be a nice hedge. I mean, yeah, it could, but I'm not sure what the benefit really would be too much other than neutralizing risk. So yeah, I'm not. Yeah, I don't know. You get one market move up, one move down. So again, if your goal is to completely sort of get rid of the risk on both of the trades, then yes. But I wouldn't see, for a retail trader, like an intraday or even swing position, I wouldn't see that as a necessary move to make. Anyway, ladies and gentlemen, I am going to head off for today. My time is up in about 20 seconds, and then you've got Marco coming to take over the show. So guys, have a good one. Stay safe. Don't get margin called, and I think I'll see you tomorrow. If not, have a great weekend, but I'm fairly sure I am on tomorrow. Stay safe.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So if you have any questions, make sure to put them in the chat. Let me move the camera a bit lower. Okay, so let me give you first some updates on the trades that I have taken and that I'm looking to take. Here it is. I took a loss on GPUSD. I told you guys that I was looking to buy UJ, and I did give this out as a signal in the A1 Discord, but I decided to remove this signal in the end. Okay, so I decided to remove this trade. I didn't get tagged in. I just removed the pending order. The reason was I was building a picture on USD JPY. I was building a bullish picture. I mean, the USD is very bullish, so I like the dollar, but the yen, I don't have a clear bias on the yen. So I'm kind of maybe even neutral on the yen. So you have the Bank of Japan who wants to hike interest rates, which should be bullish for the yen. And then you also have the new Prime Minister, Takaishi, or I think it's Takaishi. Let's check. PM Japan. Polymarket. Yeah, Takaishi. She is supposed to be dovish. So you have this kind of battle between the Bank of Japan and between the Prime Minister, and we are not sure who is going to win. So that's still a question for UJ. I decided to be a bit more patient. I don't have a massive confidence that this will continue going higher. I did place a buy limit on USD CAD. By the way, if you want to get these trade signals, trade analysis from Nick, from Iwind, from Chris, from me, you can do so by joining the A1 Discord, and you can use my discount code, which is MARKO. Just a heads up. This is the pending order that I have, so it's a buy limit. I'm looking at 1.3986 to buy, and I'm looking to get out at 1.3884. That's going to be the stop loss. I still think the USD CAD is the best Forex trade for 2025. Okay. I think the USD is looking the best, both short-term and long-term numbers. we aren't getting some fresh data recently. So right now we are in a US government shutdown. That means we don't get data. But essentially, with the current data and with the current, let's say, stance of the US, I think the US is a pretty strong currency, the USD. CAD, I think, is the weakest currency right now. So CAD is just getting bombarded with bad data. We can check it out here on the short term. See, pretty much bearish numbers on the Canada economic heat map. And then GDP for the CAD, kind of all over the place, so not looking the best. Unemployment rate for the CAD is rising, so, and it's pretty high already. I mean, relative to other markets, relative to other countries, this is pretty bad. This is pretty high. Inflation is at 2%. So there's no massive room to cut interest rates to help the GDP, to help the unemployment rate. If they want to cut rates, they're going to need to raise inflation. So if we go to BOC interest rate, let me just see on what kind of path are we. Okay, so we are on a path of essentially maybe cutting rates. Okay, in September there was a cut of interest rates. So they're trying to cut, they're trying to save the unemployment and the GDP. Of course, cutting interest rates leads to a weaker currency, okay? That is how it works. So USD CAD still my most powerful trading idea for right now. I don't want to buy at these highs. I may get in on a small position. Of course, you will be notified if you're in the A1 Discord, but I think a better option is to look for a bit of a pullback. To look at for a bit of a discount, look for a better level to get in, and I think this is that level. Okay, so that is the game plan on USD CAD. So let me check the comments. Let me see what you guys are saying. Hey, Ballout. Hey, Sluggy. So Slugmeister, you changed your name, right? Now it's Sluggy, and I think it's better. Youngest Gojo. Hey, what's up? Check USD CAD longs, where to enter, where to exit. Okay, I think I just did a breakdown on that. USD CAD is a solid setup. Yes. I think it's one of the best setups. I hate the CAD, says Joshua. Well, me too, but not because I hate Canada. I've never been to Canada. I don't plan on going to Canada. I just hate the numbers, okay? Afternoon. Hi, Aaron. Profit Pathways says, do you live off of trading? No. So I don't live off of trading, and I wouldn't recommend anyone to, especially if you're just starting out, to live off of trading. First, to live off of trading, you need to have $50 to $1,000 in your broker account and expenses covered for the next 6 to 12 months. Even the most professional traders in real prop firms like SMB Capital, they have a monthly salary. So if they're negative for the month, they still have an income source to pay their bills. So if you're a full-time trader and that's your only source of income, you have to think about what will you do when you have a losing week, a losing month, maybe even a losing year. And if you read Market Wizards, you would know that a losing year is very much possible, okay? You have losses in the market, but the expenses keep coming. So the monthly expenses don't stop because you have losses in the market. So I basically have different income streams. Education, YouTube, I work with A1 trading, affiliate stuff. So yeah, my main focus is to have my primary living expenses covered, either with a part-time job, full-time job, freelance income, okay? And then you can trade and see how you do in the markets, because that lowers the pressure. And that's the main thing, having low pressure on your actual trading performance. Waller's speech is over or still on? I didn't see Waller's speech on the Forex calendar. So it says Bank of Canada Governor Macklem speaking, but only later today. So I'm not sure if Waller is actually speaking. I didn't check that. In terms of the news, we have had for the Aussie, the employment news. It came in pretty bad. It came in pretty bearish for the Aussie. I did have a couple of ideas to buy the Aussie New Zealand, or Aussie CAD. Okay. Right now with this fresh data, I'm no longer so certain. So this doesn't look so great. We will get, actually we got GDP numbers for the pound, which came in, I think it came in a bit better than expected. So yeah, I mean, it came in right as the forecast, but it came in better than the previous number. So that could explain why GBP/USD also went up a bit today, okay, on the daily chart. So let's see. Do you trade energy? Nope. What do you think about natural gas? I don't follow natural gas. If you can give me a ticker that I can put into TradingView, I'll check it out. What about GBP CAD? GBP CAD. I would say for the pound CAD, I don't like it at all. First reason is the CAD and the pound are the two worst currencies that you can buy right now. So there's no polarity. If you're trading Forex, you need one currency to be strong and you need the other currency to be weak. That creates polarity. That creates real trends. So for GBP CAD, both are weak, and that's kind of being reflected in the price. Price looks super flat. We're now stuck at resistance. I personally wouldn't touch this instrument or this currency pair. I'm not seeing a big edge here. I'm seeing very flat technicals, and I'm just seeing we're going to remain, or the probabilities are telling me that we will just remain inside of the range. That is what I'm expecting for GBP CAD. Roberto says, hi Marco, what job do you do if you don't live off of trading? So as I mentioned, my main goal is to not rely on trading income to pay my monthly bills. So I do a lot of stuff. I don't have like a full-time job, but I do education, YouTube, I work with A1 Trading, I do affiliate stuff. So I have many different sources of income to cover my main living expenses every month. And then everything I make for trading basically gets reinvested right into the trading account or for buying prop firm challenges. So the whole income from trading pretty much never goes into living expenses. Once you rely on trading to pay your living expenses, that's when the pressure goes up. That's when most people crack, and that's when most people stop trading altogether. Went from Slugmeister to Sluggy FX. Okay, great. That's a much catchier name. I like the Meister. It's kind of like the Stiff Meister from American Pie. So it was funny. It was a bit funny. But I think this one is catchier. Do you believe in ICT and how some people make millions off day trading? Just want to ask a legitimate guy like yourself. So ICT is a complete scammer. All of his revenue came from selling courses. How do people make millions off of day trading? They don't. It's a lie. And 99.5% of the people that you see flexing online with scalping and day trading make all of their money from courses, and then they invest that money into living a fake lifestyle by renting big mansions, renting cars. So it's all super extremely fake. So ICT is a fraud. His concepts don't work if you ask me. I've never seen one profitable trader except that Jade Cap guy. I think that's the name, Jade Cap. He is apparently trading ICT and he's profitable, but that's about it. I haven't seen or met or read about any other trader who uses ICT concepts. If you have read Market Wizards, how many purely technical analysis traders can you find in there? Very little. So most professional traders rely on fundamentals, or at least know, or at least have detailed knowledge of fundamentals. And it makes sense. If you're serious about trading, sooner or later, you're going to look at what kind of an edge you can build, right? Why would you just focus on technical analysis if there's so much information out there where you can make your trading edge even more efficient, even better? For example, Chris Pulver, he trades mostly technical analysis, but he is extremely proficient in fundamentals. So he knows exactly what's going on in fundamental analysis, and it is always in the back of his mind. So yeah, even the purely technical traders still have extensive knowledge of fundamentals. And if you ask ICT or any of his students to tell you what does NFP mean, I think their brain will explode. That should tell you everything you need to know. I got tons of natural gas. Yeah, me too, especially after a big lunch. Okay, on the rest of my socials, I keep the Meister. Cool, nice. Sluggy first day on the Bitcoin job, not bad. Let me see Bitcoin. So Bitcoin is at the bottom of this range. Bitcoin, in my opinion, you could say this is the taco trade. So taco trade means Trump always chickens out. It's a sort of a trading edge. It worked during Trump's first presidency. It works now. It means Trump has a crazy tweet, crazy announcement, crazy post, market tanks, you buy it, and there's a high chance that in a few days or a few weeks, Trump will actually go back on his word and the market will be back where it dropped. So back to here. You can still buy. There's still an opportunity to get in on the bottom. I think Nick is actually long Bitcoin, but for me personally, I would be a bit more patient. I was looking for buy setups here at the top. So I was looking for kind of a break and retest here. That didn't happen. Fortunately, I did not get in because I would have been destroyed basically in the crash. So this taco trade is not for me. Wish you much success. Thank you, Roberto. Can you check the gold put to call ratio? Sure. So that should be in the market sentiment put to call ratio for gold. Let's see. So looks like we're not really in the high put volume. We're still kind of in the middle. You would want to watch these levels of extremes, such as these points when we cross the high put volume, okay? So now we're kind of in no man's land, I would say, right? So that's it for the put to call ratio. Got the niche reference. It was indeed an inspiration from the movie. Yeah, I thought so. Okay, day trading is the hardest type of trading. It is because you need to have a very, very good trading edge and you need to be fast. So if you're a swing trader, you need to have a very good trading edge. You don't have to basically be super fast. But with day trading, scalping, you need to have an amazing trading edge and you need to be super fast. Also, sometimes swing traders like Nick and me, we can become day traders because the taco trades that Nick took, so buying Bitcoin, and I think he definitely did buy the NASDAQ during the dip. Yeah, this was his trade. So he caught the dip on Friday. He needed to be pretty fast with it. So it's kind of a hybrid. It's kind of a blend. So yeah, let's get Sluggy FX on the stream. And ball out as well. That would be pretty entertaining. So Sluggy and ball out, come to the stream, present your thoughts, present your trade ideas. I know you have a lot of trade ideas and you're pretty successful, both of you. So come on, do a test run. Okay, EJ. I checked out your page yesterday for instructions for ChatGPT. Great stuff. Oh, glad that you found it and glad that you enjoyed it. Quick update on my DNA funded account. I'm back into positive, so back in the green. The two trades from yesterday, if you followed my stream, we had an SPX trade and a euro dollar trade. Both were winners. So now we are a little bit above break even. I mean, with the current trades, we are unfortunately in the red, but I'm pretty happy. If you are not aware, I'm testing ChatGPT trade signals and I'm testing them on a DNA funded 50K challenge. So far, equity is around 50.076. And if you want to get the funded challenge, if you want to expand your trading capital, DNA funded is a great option. Not because it's a great company, that's the first reason, but the second reason is we have a 25% discount code for you with the code A1 Live. Okay, so if you want to get 25% off all of the challenges, A1 Live, DNA funded, reliable prop firm ran by professionals, and they're going to be here for the next couple of years. This is not one of those prop firms that is super popular for 2 to 3 months and then absolutely disappears. So yeah, check it out if you want. Trading capital is one of the 3 biggest problems for retail traders. First problem, unrealistic expectations. Second problem, they don't have a trading edge. They trade ICT and SMC. And the third problem, they have very, very little capital. $5,000, $10,000 is definitely not enough to trade and do proper risk management and make some significant monetary gains. Okay, so there was EJ. There was EJ request. Let's just remove this. This is not a trade of mine, by the way. I didn't take this. I think Nick took it. Of course, all of the signals are in the A1 Discord. So if you're in the Discord, you got a notification to buy the NASDAQ from Nick, and you will be in some pretty nice profits. EJ, let's check on the top setups. Euro JPY. Neutral reading right now, so around 0. I'm bullish on the euro, if I'm being honest, but not as much as on the dollar, I would say. Let me check out euro dollar. Looks flat. For the yen, I don't have a concrete opinion. So I was considering buying UJ. I decided against it. I need some more information. I need some more data. So we have a new prime minister in Japan. She is apparently dovish. Bank of Japan is hawkish. That's going to be a battle. Who will win? We don't really know. So we're not really sure who will be the winner out of that battle, you could say. So for EJ, I don't have a clear trading edge. I think looking at just selling the CAD is better. So USD CAD, Euro CAD is a position that I'm in, which was also a signal in the A1 Discord. This is running nicely. So if you do want to get in the euro, possibly buying Euro CAD, I think is a better idea. So yeah, I'm going to remove this flag. UJ, I will also remove from the watch list for now. And USD CAD is where I do have a pending order. Hopefully we do come down just a bit more to hit my level. Okay. I started off as a scalper. Now I'm a day trader, swing trader. I would say the easiest way to become a consistently profitable trader is to look at swing trading. I think that will give you the biggest amount of success, and it doesn't involve you having to quit your full-time job. You can have your full-time job, you can cover your living expenses, and you can trade, place 1 to 2 to 3 positions per week. It's really not a lot of work. You can do 2 to 3 hours of work before your full-time job or after your full-time job. Very easily manageable if you love it, of course. If you don't love it, you're not going to invest the time. But if you love trading as much as you love, I don't know, watching a specific TV show or playing a specific computer game or going to the gym, you're going to do pretty well. So I used to play computer games, not like a lot, but let's say, kind of medium, I would say, effort into video games. And I used to love playing, World of Tanks. So essentially, I just replaced a video game with trading, sort of. Trading seemed even more fun than video games because you can actually make money. Thank you for the answer. And that is exactly what I was thinking. I tried day trading and they say with technical analysis, but didn't make sense when you can swing trade with information out there. Information nowadays is very easy to find. Pretty much every single market participant has access to the same information. You just have to know where to look. We'd love to, Marco. I'm currently building a solid track record lately. Also, would love to meet you guys in person. Yeah, I would love to meet you guys as well. If you can put down in which country you're located, and definitely consider jumping on the stream. I think it's great to try, and it will also improve your trading as well because it will keep you accountable, and it will also improve your work ethic. At least that's how it worked for me. So I know I now have a clear schedule with making videos and live streaming, which also makes me or forces me to do the research on time and to have everything prepared on time. I've opened the demo account. I'm also testing ChatGPT. If I get good results after 60 days, I'm buying a DNA account. Well, that is great, but I would definitely first test it out as you're doing on a demo account. And again, I'm mostly doing it for content. I'm not gonna lie, okay? My main trading performance and income is still from my personal trading. This is because I create content and I make videos, so this is great for videos, testing out ChatGPT, okay? So I would advise you to test it on the side, but also research your own trading edge and put your main focus on your own trading edge, right? So ChatGPT can work for a couple of months, maybe even for a year, and then it can just stop working and then you lose a bunch of money. So be very careful. I'm not doing it because I need to make money through ChatGPT. I'm doing it just to create some content and because I'm interested in the results of the challenge. GBPUSD ready to fall. So I did place a bet that GBPUSD will fall. Unfortunately, it just climbed back into the range. So took a loss right there. Let's lock it. And now we're back in the range. Unfortunately, we couldn't break out. We got some, I think, positive pound news. Yeah, that is true. So this morning we got some positive news out of the UK. And now I'm expecting, unfortunately, more range-bound price action for the pound. So this is what I'm seeing in the cards. Okay. So if you want to trade pound USD, because I'm still very bearish on the pound and bullish on the dollar, I would like to see a breakout. So I would like to see a breakout lower. Just a clear breakout on the daily chart. I already had some previous trades, didn't I? Whoa, I took 2 losses already. I'm not gonna look at that. But they were all basically, they all had a good trading edge behind them, so I'm not worried about losing free trades as long as the trading edge is there. My broadcast hearing Marco with my $200. I think the best thing you can do with the $200 is invest it into education, but proper education. So, for example, or you can just watch Trader Nick for free. He gives a ton of knowledge for absolutely free, right? And then you can maybe consider joining the A1 Discord for a month. See how you like it. But if you only have $200, best thing you can do is you can invest into quality education. Trading it won't do much. Just wanted to jump on the stream and say this: profitability is about the trader, not the strategy. ICT strategies made me 10K this month. Don't let him discourage you. Find what works for you. If you have made 10K from ICT, congratulations. We can have good winning streaks. Okay, everybody has experienced winning streaks and losing streaks. So winning streaks, even with an unprofitable strategy, can happen. Now, maybe you're profitable long term, but in a span of 1, 2, 3, 4 years, I don't think you have a massive trading edge. That's at least from my experience, from talking to other traders, from reading market wizards, from researching traders, ICT, SMC, purely technical analysis, long term, not the biggest trading edge. That's just my opinion. It may help you or you may get angry, but I need to say it. Okay. GPUSD, we have taken a look at that. Coming to the streams as a guest would be a dream come true, but before that, I should have a solid track record to prove my worth. If that is what you would like, then that is completely fine. I do agree with you, having a solid track record that you can show to people is definitely going to help a lot with credibility. So that's a good idea. Whatever you want to do it. But of course, number one focus is trading and trading performance. Okay. Would love to watch Ball Out and Trading Berserker coming to the show. Me too. Marco, give ICT some credit. There's truth in lies. ICT is literally proven unprofitable. I don't know why people don't just spend the time to earn something that works or learn something that works instead. Well, it takes a bit of time to realize what is a scam and what is real. So I have been a big believer of purely technical analysis when I was starting out trading, and I thought just having lines on the chart, trend lines on the chart, was going to make you a millionaire. Well, let me tell you, everyone can draw lines. So everyone can come to the charts, do this, and say, we have crossed this and this trend line, let me buy, let me sell. So what's the real trading edge behind it? You always have to ask, what do you know that the other 95% of market participants don't know? So the stronger your trading edge is, the more profitable you will be. Do you think Jim Simmons from the Medallion Fund, the most successful trader in the world, do you think he traded trend lines? Do you think he even knew what trend lines are? I mean, he definitely knew what trend lines are, but he didn't rely on them. He had some extensive trading edges that no one knew about, and that's why he was able to make 66% on average in a time period of 30 years. Okay, so we are approaching the end of my segment. I will run through my watch list to end things off. For the NASDAQ, also for you guys in the comments that want to argue, I'm having a personal stream on my personal channel in like 1 hour, so you can join. We can argue for 45 minutes. It should be fun. So for the NASDAQ, I like it. I'm looking for pullbacks. We got a pretty big pullback. It wasn't the best one I've seen. So I'm looking for some bigger pullbacks. If we can go back to this level, or maybe a bit lower, that is what I would like to see. Okay, so I have the same opinion on gold and silver. Let me just check if someone is after me on the live stream. I'm the last one. Cool. So yeah, see you, SluggyFX. Could you drop your page before you go? Yes, it's in the chat. Marcos Trading Journey. You can check me out. Anyway, gold and silver, massively overextended. I want to buy it, but I want to get a discount. Okay, so I want to get a discount. I want to get a pullback. Am I looking to sell? Absolutely not. So I'm not looking to sell these markets. I think they're massively overextended, but I also think they can continue. Levels, if you want to hear about levels, let's say here, that is good for gold, for silver. Let me see for silver. Just a second. So just 2 more minutes and then I'll be done. Gold and silver, yeah, I told you. So pullbacks, close to 20 MA or some levels, that would be nice. USD CAD, I have a buy limit set. I think this is the best pair to trade in 2025. I think the USD is the strongest, CAD is the weakest. GBPUSD took a loss. I'm out of that. Euro CAD, I'm in. It's actually in profit right now. I like this trade. I don't mind holding it for the next 2 to 3 months. Okay, so it still looks super healthy. I still like the euro, and I still hate the CAD. So yeah, good trade. I think if you want my best Forex pairs, buying USD CAD, buying Euro CAD, that is totally fine. Big trading edge behind it. That's it from me. The guys that want to follow me on my personal account and talk about ICT and talk about how it's a scam, you can find me at Marco's Trading Journey in 55 minutes. So thank you for watching. See you also tomorrow on Trader Nick, and have a great rest of the week. Goodbye.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.